Here's a question that might sting a little. If you were to die tomorrow, would you be leaving your family with memories or a mortgage? Life insurance isn't for you. It's to protect the ones you love the most. So in this episode, I'm going to explain what is life insurance, why it matters. We're going to cover the 3 different types of life insurance, and as well talk about how to estimate the amount of coverage you actually will need. Stay tuned. Hi, I'm Marco. I'm a licensed agent in the province of Ontario, and I'm very passionate about personal finances and helping regular families demystify how money works. I love helping people make better sense. Let's get the standard disclaimer out of the way. This video is for educational purposes only. This is not for financial or insurance advice. You need to sit down with a licensed professional to discuss what your insurance options are, and you should only do that after you've completed a financial needs analysis. With that out of the way, let's get going. By the end of this video, you'll have an understanding of what insurance is, why it matters, the 3 different types of insurance, term, whole, and universal, as well as how to estimate the amount of insurance you're actually going to need. And I'm even going to try and keep this one under 10 minutes, so let's get into it. What is life insurance? Well, to keep it simple, life insurance is a contract between you and an insurance company, usually in the form of a policy. You pay monthly premiums, yearly premiums, and if you happen to die while under coverage, the insurance company will pay your beneficiaries usually a tax-free lump sum payment. Let's talk about why life insurance actually matters, and ultimately this is the tale of 2 families. One family didn't believe in life insurance, and one of the spouses, which was the breadwinner, passed away very early, leaving behind their spouse, 2 children, a mortgage, debt. Now, the surviving spouse had a hard time, not only grieving their loved one that passed away, but as well making final arrangements, paying for it all. Without any insurance, they truly thought that they would have years in order to plan, save, invest, and build up wealth in case something happened. But sometimes, death doesn't have a schedule. It happens when it happens. Circumstances. Now, the tale of the other family that did believe in life insurance, same thing. Left behind a spouse, 2 children, mortgage, and debt. But since they believed in life insurance and they kept their life insurance in force and updated, they were able to cover the final expenses. They were able to cover the mortgage. They were able to cover some of the debts that they had, as well as enough money to help raise the children until they became 18 with a little bit of something extra to help with the children's educational. That's the point. Life insurance is love in financial form. It gives families the time, space, and security they need right when they need it most. So the first type of life insurance we're going to talk about is term insurance. And term is simple insurance, or rather temporary insurance, as some people might call it. You choose a time frame, or a term as we call it. You can do 10 years, 20 years, or 30 years. If you pass away during that term, your family gets your payout. The pros is that it's fairly inexpensive. It's the lowest cost of the 3 insurance options. And it's great for covering temporary needs like mortgages or just making sure that you have insurance while your children are dependent on you. The cons is that once the term ends, then the coverage ends. Now, you can always renew term insurance, but you're going to be renewing it at a much higher rate because now you're renewing it 10 years later at a higher age. The second type of insurance we're going to talk about is whole life. Now, whole life is permanent insurance, and as the name would indicate, it's there to cover you for your whole life. Now, the premiums are higher than term insurance, but part of the payment goes towards a cash value that you can access later on down the road. You can access it as a living benefit as well. Think of it as insurance plus a built-in savings account. It's predictable, but it does cost more. The third type of insurance we're going to talk about is universal life. Now, universal life is whole life's flexible cousin. You still get lifetime coverage, but there's also an investment component. The nice part is where the flexibility comes in is you get to decide how much you want to put towards that investment component, and there's also some options for you as well. Now, this is great for long-term planning, tax efficiencies, and it's a lot more complex than the other two. You're going to want to sit down with your advisor and plan that one out. So how much coverage do you actually need? A quick guideline is not a hard set rule, but a good guideline is between 7 and 10 times your annual income. So if you make $70,000 a year and you have a $300,000 mortgage, likely you're going to need anywhere between $700,000 to $1 million in coverage. But it's not just income that you want to factor in. You also want to factor in your mortgage, your credit card, your debts, your final arrangements, children's education, as well. How many years of support do you want to leave for your family once you pass away? Common mistakes to avoid, and I see these ones all the time. Waiting too long. The younger you are getting into insurance, the lower your premiums are going to be. And when you get either whole life or universal life, those premiums are locked in, whereas temporary is not. Every birthday you wait in order to get insurance, it makes it that much more expensive. Another mistake is relying on your group insurance from work. Woefully inadequate. It only covers the bare minimum. Ideal for maybe some final expenses, but it doesn't follow you around once you leave that work. Underinsuring is also a huge mistake. If you need $500,000 to cover everything, but you only get $50,000 of insurance, you're really not doing your family any favors. Let's remember, term, whole, and universal life each has its place. Estimate your needs, avoid the common mistakes, and sit down with a professional in order to discuss your options. If you have questions, put them in the comments below. Most likely there's someone that's going to have the same question as you, so don't be shy. If you know someone that needs to hear this video, share it with them. In the meantime, let's make better sense together. If you want to beat financial risk, click this video up here. If you want to learn more about dollar cost averaging, click this one.